everyone. Again, this is Gilbert Jalad talking to you from CPLS headquarters. This is Tufts On Tax, where all your tax law questions are answered right here. Any trouble you are having with taxes regarding lawsuits, trouble with the employers, businesses, friends, and family, even with the IRS, your peace of mind is right here with Mr. T. Scott Tufts. Now, he is the expert and the master when it comes to taxes and tax laws. You can call us at any time here at CPLS at 877-647-7887. Again, that's 877-647-7887. Or you can go to cplspa.com or tuftslawfirm.com, or simply email him at stufts@cplspa.com. Now, Mr. Tufts always focuses on how tax forms and other issues impact people's daily lives in ways that are often overlooked and unknown. So, hello, T. Scott, how are you?
I'm doing fine, Gilbert. Good to be with you.
Good to be with you, too. Now, last time we were talking, of course, first time we talked briefly about the taxes and tax laws and why we need them, where do you come in? And then we went over 6 segments of forms that you have that you deal with on lawsuits and daily basis and with clients and businesses. And we brushed a little bit on them with who needs them and why they have to have them. Now today we're going to start, talking briefly about each one and in a little bit more details. Now I see I have so many questions for you, but let's start with a few questions. First of all, let's start with one of these forms, like the K1. This Schedule K1, what is it?
So, Gilbert, the idea of a K1 is connecting you to a business that you're involved in, and it helps address the tax consequences that are flowing to you from that business. So if you and I take a simple example, you and I are in business 50-50 together. Let's say we have an LLC. Mm-hmm. We want to be able to know what percentage of the LLC business's income would come to my personal tax form, my own personal tax situation. The K1 represents the connecting piece, if you will. It brings, if we were 50-50, potentially 50% of the income and 50% of the expenses to my personal return, and at the same time, 50% to you.
Oh, wow. I'm sure there's still more to learn about this part because I could go even more details on questions. Now, I see that you have separate parts of this. You have A, B, and C. Now, and this is under the K1?
So, Gilbert, what I was emphasizing to you when we were kind of looking at this issue is that there's a K1, but technically speaking, there's a K1 for different types of entities, if you will.
Oh.
So I was just trying to be sensitive to the idea that there's actually, technically speaking, a K1 to the Form 1065, which is a partnership or LLC type form. There's a K1 for those people who operate in S corporation status. Many people know about that. They'll say, oh yeah, I have an S corp. And there will be a K1 that's really tied to that form. And then there's many folks with a trust or an estate situation, and there's a K1 tied to that type of situation. So this idea of a K1 connecting you to something else is more specific to different types of entities, and I didn't want us to miss that point.
Oh, I see. Yeah, I see here Forms 1065, Form 1120S, and then 1041.
Correct. So many folks say in the discourse of our citizens, when you start breaking things down and unpack them, we might hear in the daily talk, well, I have there's a big corporation and it might pay taxes or not pay taxes or have different impacts on it. But for small business owners, they might actually have something called an S corp or an LLC, and the tax systems in our country look to pass that through, Gilbert, so that we don't pay tax twice in certain types of small business and trusts and whatnot. It will pass it through to you. So if you're part of one of these things, this S corp, LLC, partnerships, or even a trust or an estate, what you're interested in is getting that K1 that then reports to you and on your tax form the impact of being in that situation. So it's the connection piece, if you will.
I see. And when I mentioned them earlier, I'm sorry, I wanted to specify. So the 1065 is partnership LLC.
Right. So let's break them down.
Yeah.
The form 1065 is the tax form number for people that engage in a partnership-like activity, meaning more than one owner, who are engaged in some kind of joint venture partnership kind of structure. And LLCs are very popular. So that's one example. A general partnership is another, and that's where that goes. So the Form 1065 is for partnerships, LLCs, and the like, and is particular to those situations.
And I see also 1120S, S Corp.
Right. So many people operate in a business format, but many people don't realize that if they're an LLC, they can elect to be an S Corp. So it gets a little confusing to folks because they may say, do you have an LLC? They say, yes, I do. And then they say, but I'm an S Corp. And they say, oh, but you're a corporation. Well, you're not in terms of maybe some technical view of the state law, but for tax purposes, you will be an S Corp and filing the 1120S for the business. And it has a K1 that connects those activities to you as a shareholder or owner or LLC member.
And that brings us to 1041, which is for trusts and estates, I believe.
Absolutely. So the estate planning people, the people that do probate, the people that work with you in an estate situation, or if you're a beneficiary of a trust, you know this form as well, because this form is a K1 that connects you to the activities of that trust or that estate and tell you what the activities are that are to be reported on your 1040, your individual tax form.
Okay, so what kind of information, now we're talking here what forms and how is it divided, but what kind of information is on that K1?
So this is the unknown. It's easy to talk about a connecting piece, but the gathering of lots of data about your business, particular to the impact on you, is what the K1 does. So when I start looking at the K1 and talking to clients about the K1, they will be amazed at how much information is inside the four corners, if you will, of that form. So it's more than just a number. It's multiple numbers. It's more than just a bunch of multiple numbers that go on your tax form. It actually is going to keep track of your, what you paid for your interest, right, Gilbert? You might have what about you go to sell your interest, right? You sell your business. You sell an interest in that business. Well, what did you pay for it? And then if you sell it, do you have a gain, right? So these forms start to break that down and provide all of that information that comes to you personally. And my big concern, Gilbert, is, are you scrutinizing that to make sure it's correct, right? Because nothing would be more horrible than you're given a form, it has a bunch of data on it, and it's wrong, and you do nothing about it, because the system may then say it's too late when you finally figure that out.
Okay, now we went through the form of K1 in all these segments, but what kind of information is on the K1?
So Gilbert, when we look at the K1, it's not enough to say, okay, you get a K1, and I say that it connects the activities of that entity or business to you and what to put on your personal tax form. It's not just one number. There's a whole wide variety of information that's going to be on that K1 that will be more than just dollars and tax impact. It will have individual information on you. It will run ongoing totals of things that you have as your share of that business. There's so much more on it that you have to have a focus on if you can even see the form, because after all, a lot of this is happening electronically, and you may not even look or know to look for that form.
Let me tell you, just listening to all this, I'm overwhelmed, and definitely you need the experts to guide you. Now, if you don't have the accountant, and then later on, if you have problems with something like that, I mean, we can learn it, we can, uh, read about it, but when you face a problem, when you face a lawsuit, and then what are you gonna do? Definitely we need an expert like you to inform us, to help us, to guide us, because definitely we won't know what to do.
And so, Gilbert, if the tax law is run on the idea that you have to act promptly as opposed to burying your head in the sand, then if the onus is on you to contest a K-1 that is wrong, but you don't even know anything about a K-1, you don't know that there's all this information in a K-1, and you sit on that, and then you go to take action later, or it comes up in litigation, it might be too late.
Oh, wow.
So the idea here, and this is why we're doing this podcast,
That's
Gilbert,
very important,
because I can't get that point across quick enough. It has to be responded to when it's happening, not later.
You heard that, everyone. Act right away when it comes to a K-1. If you're not knowledgeable of it, even if you know enough, but you still need the expert to take care of it for you. You need Mr. Scott Tufts here to help you and guide you, because you don't want to fall into more problems. And like you said, acting later on it,
right?
That's the damage.
And Gilbert, one more point on this. So, and again, the accountants that I know, the CPAs, the people that are diligent out there doing these returns, they do the best they can under these different situations. But imagine, if you will, you have an accountant or someone preparing the return who's preparing both sides of the equation. And what I mean by that is they're doing the corporate return or the LLC return, and they're doing your return. You don't even know that they've bypassed that K-1 process, because they're going to assume that the information that they're reporting on your return that they're doing as well is accurate, right?
Yeah.
But if you have a partner who's getting impacted by this and they have their own accountant, then you can see where things can start to come up, where one party says, wait a minute, I don't agree with that, and they have to have the opportunity to be heard. This is where I'm trying to get the sensitivities out, get the word out. We talked about unknowns. The unknown here is, Gilbert,
Correct.
Do you even know to look for the form on an ongoing basis, to have it scrutinized independently to make sure that it's accurate?
You are right, and that's when it gets messy. If you don't know what to look for, then you're lost to start with. Now, this brings me to, can this K-1 really get filled out incorrectly, other than the problem that you were talking about, neglecting it or falling into problems between two partners? But how would it be filled incorrectly when you were mentioning earlier, like one of the partners, his accountant did something like that?
So, Gilbert, we talk about this idea that our tax system allows for small businesses and others to operate in a way where the entity itself does not pay tax. It passes through its consequences to you on a K-1. You are to report that on your tax form. So an example of something going awry, if you will, would be that if the income amounts are wrong, right? Imagine that. And the reason why you can kind of start to understand how that can happen is our tax system may provide you with an income impact, but you didn't get any money out of the business. So if you can imagine, you're sitting there and you're told, Gilbert, you've got $40,000 of income to put on your tax form, but you don't have the $40,000 or any cash that came out of that business. You might be shocked that your income tax bill that's coming out on your personal return has been essentially upped by that $40,000 that has come through. So that's one example. Now, that may not be incorrect, because it may be the consequence of you doing in business in a way that you weren't aware of. But there's plenty of other examples, Gilbert. We may have complicated tax laws, and we do. that will
Absolutely.
will bring different items, because what you're going to find is that this K1 has more on it than just one item. You know, if I'm looking at it here and I see that there are 20 items that are detailed that are going to go on a K1, and that's just the right side of the form. And then the left side of the form is taking down all of this data about you, the partner, the type of partner you are, do you have a foreign partner? Is the percentage profit, loss, and capital, are you really 50-50 in our example? What happens if people have structured the arrangements in a much more complicated way? What happens if you have liabilities? Do you realize that, oh my gosh, I have a share of debt that impacts my basis? Well, basis just being what you have in that business. Because if you look to sell, you're going to want to know that you've gotten proper credit in your capital account or what you have in the business, so that when you sell it, you have an accurate amount of tax to pay. It's much more complicated than that. And again, Gilbert, this podcast is dedicated to the idea of, you know, when you probe into this, there's so much data that you've got to be on top of. Maybe, Gilbert, the easiest example I can give you, one final one here, but there's many. Gilbert, you're not a partner in a business, but you get a K1. You have to contest that. You have to say, wait a minute, you've sent me this form. I am no longer a partner, or I was never a partner. I have to then say that it's incorrect.
I'm sure we can go on and on and on in details, and we will continue talking about K1 on future episodes and also other forms. Again, you can always call us at 877-647-7887 or visit us on the web, cplspa.com. Simply also email him on stufts@cplspa.com. Thank you everyone for listening, and wait for the next episode. Thanks.